Yo, good morning. Thank you guys so much for joining. Today's August 23rd, 2024, and today's video is going to be a live stream. Alright, let's get right into it. Alright, so coming into this morning, I am anticipating for us to continue lower here if possible on NQ. Yesterday we had a massive move lower here, so depending on how the next 4 hour and hourly candle close here will tell me if we will continue lower or not. But as of right now, we are bullish for the time being, and it appears that we are actually still holding bullish here. But based on this daily time frame right now, based on this daily candle, I can anticipate for us to take out that daily candle's low. So I'm anticipating for daily low to be taken here, and even I want to see us take out maybe Monday's lows as well. But that's only if we can get some sort of respect shown here on the hourly time frame, because we are trading within a 4 hour CB. So any longs that we do take are going to be how do I explain this? Lower probability. But yeah, let's just watch price action and see how we trade here. Overall, we are bearish as of right now, but like I said, I think it could happen. So let's just watch how we close here on this 4 hour, and if we have a bullish closure, then I'll reconsider whatever I had in mind. But if we are to long here, it would only be intraday models, because like I said, we are trading within a 4 hour CB that could take us lower at any point. Any longs that are actually efficient and higher probability is once we get a complete closure above this 4 hour fair value gap. If we don't get a complete closure above it, then it's going to be lower probability shorts. We have the New York AM open in about 4 minutes here, so let's watch where prices takes us here, if we continue lower or not. Friday here we have news. Fed Chairman Powell speaks at 10 o'clock, and we have Jackson Hole Symposium at, well, it doesn't really have a time, but it's just all day, so let's just watch that. ICT states that during the day of that that time event, we usually have really poor price action, or not poor price action, but very sloppy price action during the week of this event here, and it only occurs once a year, so just keep that in mind. We have London lows intact here, we have Asia's lows, so coming into the New York AM session, like I said, if we do respect this 4 hour fair value gap that we are trading within, I would like to see us take out London lows and Asia's lows. But we need to see some sort of displacement lower first for us to actually consider any shorts. As of right now, there's no displacement lower. Like in this move here, there's actually no CBs to the downside, at least on the 15-minute time frame. There's no fair value gaps that supports the idea of us trading lower. There's only been BISIs. So let's see how we treat this 15-minute fair value gap here. That 15-minute fair value gap should hold if we are bullish, but only time will tell. And what I mean by that is if we get a closure, a time closure below this 15-minute fair value gap here. But I'm gonna stay on the hourly time frame just so I can get like the over, basically the higher time frame narrative here. I still would like to see us take out, you know, previous day low, but let me mark out equilibrium here. There's equilibrium of this price range. So we have yet to trade up into equilibrium. Daily time frame, we're bullish. We're bearish on like the hourly to daily time frame. I would only consider longs again if we can get a closure above this daily fair value gap. Once again, and you know, fill in the consequent encroachment. Disrespect the consequent encroachment of this 4-hour fair value gap. There's the New York AM session open. Let me pull up the SMT charts here for you guys. So we'll see what happens from here. We are also trading inside a 8-hour, 4-hour, 10-hour fair value gap. Very, very interesting. Depending on how this 8-hour candle closes and this 4-hour candle closes, will tell me if we are going to seek for higher prices at the moment, or if we will seek for lower prices. I would have to see displacement to the downside here to actually consider anything. Let's see. We still have about 30 minutes left, so just be patient and wait for that. We still have 30 minutes, so this could just be the morning manipulation. So I would wait for a candle closure before I consider anything, but yeah, I would wait for a 4-hour candle closure here. So this first 30 minutes of the trading day, I am not, like I said, I'm not considering anything. I'm not going to be trading it. So yeah. We have opened up actually here, so we opened up. Let me just keep it like this actually. So I do want to see how we treat this consequent encroachment. Will we get a fill of this on bearish days here? If we're bearish, we will get a fill of this RTH gap. We will fill it, and it will retreat the low end as resistance. This was shown yesterday. So yesterday we filled it in and we retraced back inside the RTH gap, and then we displaced lower. Yesterday was actually a very, very clean trading day. If you guys were watching the live stream, it was very, very clean. Very clean price action. in the later half of the New York AM session. So I'm gonna keep referring back to this RTH gap. So here's London. There is a London low. Like I said, I don't trade the first 30 minutes, so I'm not going to be entering any trades. But I do want to just spectate and see what prices does here. And notice how we have already taken out London highs and Asia's highs. So the remaining session liquidities that we do have are London lows and Asia's lows. Let's just watch how this 1 hour and 4 hour candle closes here. And before we do, while prices does that for the first 30 minutes, I'm gonna go over some of the pros and cons and some of the improvements I could work on this week. This is the last day of the trading week, so I just want to go over it. I'll go over it with you guys, and hopefully it can help you guys, and I hope it'll also benefit me. So let's see where. So pros and cons from August 5th to August 9th, and this will lead on to this current week. Is the right? It should not be August. What the heck? Yeah, it shouldn't be August 5th. It should be August 12th to 16th. What the heck? I have had that one like 12 to 16. Alright, so week of August 12th to August 16th. What did I do wrong and what did I do right? So, pros. I was able to utilize all my knowledge and all of my trading concepts I was able to combine all of that and formulate a trading model. Using the fair value gap theory, I was able to formulate the idea of a breakaway gap for me. I was able to use that in alignment with time frame alignment, power of 3, and using standard deviations for projections. Second pro is if the consequent encroachment of a fair value gap that I enter off of, so my entry fair value gap, if the consequent encroachment of that fair value gap gets disrespected, whenever I say disrespected, I mean close above the consequent encroachment or close below, depending on if I'm shorting or longing. If we get a closure above the consequent encroachment, then I would take off some of my positions, so just so that I can mitigate risk. The third and last thing is I was able to align my entry with a new day opening gap, because in this specific trade on August 16th, a new day opening gap was actually overlapping with a fair value gap that I was trading. I was using to enter, so there was SMT with ES and NQ, and I believe this one was NQ hadn't taken out the highs yet. However, ES did take out the highs, so I should have been able to position my size around the SMT, but I disregarded the SMT, and that kind of led me to experience a losing trade. But I could have prevented a losing trade, or even prevented, or kept the losses small by recognizing that it was SMT and trading lower size, or not taking the trade at all. One mental con from last week for sure was not facing the trade outcome head on. I was, after I entered a trade, I would cowardly, kind of like ignore the trade, kind of like just set it off to the side and really not tend to it, because people's trading styles are different. So some people can leave the charts while their trade's running, but the way I trade is a little bit different. I have to be there present, because I need to be able to manage my take profits and move my stop loss and trail my stop loss, and I can't manage that if I'm not present at the charts. So today I'm gonna work on that. So if I were to take a trade, I'm not going to try to disregard the trade. I'm gonna, if there's SMT, then it's up to me as a trader to formulate am I going to risk lower size? Am I going to risk normal size? Am I going to disregard this entire trade in this? And follow my trade model, be really selective of the setups that I do take. I'm going to continue to use all my skills in my arsenal to formulate a trade model. So I'm going to use power of 3, I'm going to use time frame alignment. I'm going to use fair value gap theory. If there's a fair value gap, that should be treated as a breakaway gap. And if lower time frame aligns with higher time frame narrative. The fourth thing is, like I said, the mental thing where I can work on my mental wise is, whenever I'm in a trade, I have to practice being more attentive and being more present there. I'm not going to simply put the trade on the side and just ignore it. I'm going to face the outcome with confidence, with conviction, and I'm going to be content with the outcome. There's that. So I'm going to go over some of the risk management plan for today. So the risk management plan. So I'm going to be trading normally. I'm not going to de-risk myself or anything like that. First trade, $480 will be my maximum stop loss if the trade is a 1-to-1 risk to reward. But if it's a 1 to 1.5 risk to reward or higher, then it'll be 720 risk to reward. Second trade, if I win my first trade, right, and I make, let's just say for example, I make 500, then the second trade I'll risk 250, just so I can mitigate my losses and keep my profits. So just risking half of the profits from the first trade. But if I lose my second trade, or if I lose my first trade, then $240 will be my maximum stop loss if the risk to reward is a 1-to-1. But if it's a 1 to 1.5 or higher, then my risk to reward will be 320. Third trade is, if I win my second trade, then I'll be risking half of my profits from my second trade. Same concept. Very self-explanatory. But if I lose my second trade, then on my third trade, I will only risk $120 if the risk to reward is a 1-to-1. But if it's a 1 to 1.5 risk to reward or higher, then my third trade I'll risk $160. Some of the rule sets here is I cannot take any models that's below a 1-to-1 risk to reward, so I'm not going to risk 50 cents to make $1. What else? My risk to reward is going to be set at where I take my first partial, not where my full terminus is. So if I set my risk to reward at my full terminus, then the trade will end up being maybe like a 1 or 3 or whatever. But I like taking partials, so I'm going to set my risk to reward at the very first partial. And whenever I do take a partial, right? My first initial partial, I'll take off half of the position size, and I'm gonna move my stops to break even. A original position size of 20, for example, I would take off 10 at the first partial, and then I'm gonna move my stops to break even. After that, I let the trade run it on its own, and then I have, you know, separate TPs next. So like if there's a you know, if there's, I'm targeting previous day low and London lows gets taken, that's half off there. I'll take off another half at maybe London lows, and then, you know, and yeah, that's gonna be all for my risk management part of the stream here. You guys can take a screenshot of how I'm gonna handle that, and yeah, this is a trade example here. This trade here is actually aligned with the 30-minute time frame. We created a bullish 30-minute power of 3. We had a 15-minute fair value gap. Whenever we retraced back inside this 15-minute fair value gap, prices had a reaction to it. And what I mean by a reaction to it is that we had a bullish candle closure after we retraced into this 15-minute fair value gap. So based on this 15-minute power of 3, I can anticipate for us to take out this 15-minute high. So going on to the lower time frames is when I would, you know, look for some sort of entry model or entry pattern. So on the 1-minute time frame, we had this 2-minute fair value gap. Prices retraces back inside the 2-minute fair value gap, and I'm targeting the 15-minute high and the 30-minute high. Like I said, 30-minute high is now the 15-minute time frame is aligned with the 30-minute time frame. This initial 15-minute candle here isn't aligned with the 30-minute time frame. So going into the lower time frames, whenever you go into a lower time frame, that's when it will tell you when we will complete a higher time frame objective. That's when you use the lower time frames. But you use higher time frames for narrative. You understand that the higher time frame draw, or you know, the flow, you know, the way the markets are actually flowing, trading the trend is higher. However, lower time frames you can trade, you know, lower time frame models, and yeah, you have to understand objective. But this is an A+ setup. I would take this every single time we had a reaction to 15-minute fair value gap. We had a 15-minute bullish power of 3. Now 15-minute power of 3, or the 15-minute time frame is aligned with the 30-minute time frame. And if I were to set my TP to where a 15-minute high is, my risk to reward would be below 1-to-1. So in this case, I would have move stops to break even after prices takes out 15-minute high, but I wouldn't take off a partial. Oh, I see why I included this example. My first partial would be at the 30-minute high. So because I'm entering based on this model here, the 30-minute high is my draw of liquidity, and the 15-minute high as well. But however, if I were to enter and take off partials at the 15-minute high, that would make my risk to reward like maybe like a 0.5 to 1. So I'm risking $1 to make 50 cents. That's not what I want to do. So instead of taking partials off at the 15-minute high, all I do is move stops to break even, and then I take off partials at the 30-minute high, because the 30-minute high is the draw of liquidity on the 30-minute time frame. And yeah, that's basically the overall setup. And I also want to go over 2 examples of an A+ setup. So I just went over one. To provide you guys with one more, I'll actually go over the trade from yesterday. So the trade yesterday here was based off of this 15-minute power of 3, this 30-minute power of 3, and this 1-hour power of 3. So based on those time frames here, I can anticipate for us to be bearish. I can anticipate for the hourly low to be taken, the 30-minute low to be taken, and the 15-minute low to be taken. So we actually, I don't note this out here, but we actually created this bearish 15-minute power of 3 here because we retraced back inside a the low end of the RTH gap. So I don't know if I note that out, but we created, okay, so we created that. So let me actually underline that. So we created that bearish 15-minute power of 3 after trading into the RTH gap low. So we created a bullish. We know why we created that bearish power of 3. And now you want to go into the lower time frames to find an entry model or an entry pattern to target that 15-minute low, that 30-minute low, and the 1 hour low. On the lower time frames, there is a 2-minute fair value gap, and it's a 1 to 1.49 risk to reward. So if I were to actually take this and target the 30-minute low as my first partial, then it would have been more than a 1.5, and I would have been able to risk 864. Notice how on this trade here, I'm actually selling above the 11 o'clock open, 11:15 o'clock open, and the midnight opening price. You guys can't see it here, but further right, there is a there is a midnight opening price candle. Here it is. So there's that. I'm selling, well, this is from yesterday, but I'm actually selling below the whatchamacallit, the midnight opening price here yesterday. We have 10 minutes left in this 15-minute candle, and in the 1 hour candle, and the 4 hour candle. So just wait for that. So we have time. But yeah, this is an A+ setup, targeting 15-minute lows, 30-minute lows, 1 hour lows. All three of those time frames are aligned with each other. And we're treating this 30-minute fair value gap as a breakaway gap. This shouldn't be retraced back into. And yeah, overall, this is an A+ setup. I would take this every single time. And yeah. Depending on how we close here in about 9 minutes or so, 8 minutes, will tell me if we would take out, you know, London lows or this swing high up here. But we have like this, or no, I'll wait. So I'm sure you guys have noticed now, but the way I trade is very time based. I like waiting for time frame alignment. Time comes first. Sometimes one thing I do notice that is how even though we're bullish or bearish here on the higher time frame, like we're bearish here, right, on the higher time frame, or we're bullish here on the overall daily and weekly time frame, in this specific 4 hour and 8 hour time frame right now, we're trading lower. Actually, we just showed displacement, and the reason I say this is because understanding the objective of every time frame is very important. So even though we're you know, overall bullish on the weekly and daily, doesn't mean that we can't short. We just have to understand that every time frame has an objective. So like right now here on the hourly time frame, at least we are we're trading inside a 4 hour fair value gap. It's a lot. Like this is gonna sound like over your head here, but on the daily time frame we're bullish. On the 8 hour time frame we're bearish. On the hourly time frame, however, we're bullish. That's a little bit contradicting, if that makes any sense, what I just said there. I feel like I just confused the heck out of all of you guys. Fed Chairman Powell speaking in about 10, or not 10 minutes, 5 minutes or so. So I actually don't want to enter the trades at 10. We do have some, we have the Moses of trading speaking in about 5 minutes or so. So let's not try to be hasteful and rush into a trade. Let's just be a little bit wary. I'm gonna be right back. I'm gonna get some food and then yeah. Alright, I was able to do stream week, a recap for stream, review previous week's trades. So I'm actually eating right now, so I don't care if you guys watch me eat, it's cool. Let's stay on the 15-minute time frame here, and just spectate what prices does in about 2 minutes. 1 minute left till the 10 o'clock open here. It appears that we are going to create a 4-hour fair value gap. So we have two 4-hour fair value gaps actually here. So we can, if we respect them, then we're bullish. So there's the 10 o'clock open. Check out the 4-hour high. There's buy side liquidity right there. Check out the buy side liquidity. All right. What is my move on black here? If I go here, he takes. There's really no point in going there. To ask for a hit. Okay. What can we trade? Ah. I take here. He takes. Okay, so I go here. He takes. I take. I take. I take here, he takes, and then I take, and then he takes, and then I'm losing position. I go here, here takes, I take, he takes. Yeah, I take. I go here and he just takes this, and then I can't take here. So is my move? No, is my move here? Here. I go here. He's forced to go here. I take, and then he takes. Is it here? Okay. Now it's okay. I go this now. Okay. White to move. I go here. 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 Not too shabby. So I always like to wait for candle closures. So we took out that swing high. Took out this swing high here. So we took out the swing high. We also did 2 on ES. Did we take it out on YM? We did. We're about to take out previous day high here on YM. I would just continue to just watch price. Really, not really anything to force here, because we didn't have any reaction to this 4-hour SIBI, so there's no need of shorts to short. I'm playing good shows while we wait. Gonna block this pawn's development so I can actually get this. think this is probably the best move here. He takes, I take, and now I can. He takes, I take, he takes, I take. I'm actually up a piece. I'm up a bishop or a knight. And if he moves his knight here, I swing this way, bam, checkmate. Actually, I think this is better. Because now I'm threatening that knight again. Now, if he doesn't be careful, I actually have mate on him here. I have a mate here. So if he takes, this isn't hanging. Oh. So there he could, all he had, he was forced to do something with his, you know, queen. Like, I don't know what he could have done. Let's see. So I take his knight, right? I move here. I'm threatening mate. What he could have done was swing this way? No, I don't think there's anything else that he can do here. I mean, he can go here, and it's a free, and then here, and he's still like losing. Unless he goes here. If he goes there, then that's actually not losing for him. Here, I take it, he takes, and then I just start mate. He goes here, I go here, and then he's still threatening mate. He goes here, I go here, here, and then he still can't do anything about it. Yeah, I think I just win. I think that was a forced checkmate. I'm pretty sure that was. Oh wait, I can't take it. Oh. Very early. I think the best move is here. I think I just cancel here, right? He's gonna cancel here. I move this back. To attack here. I go here. I actually think I'm winning here. I think I'm winning a knight. Okay. So he's attacking these squares right now. He goes. If I go here, yeah, I think I go here, develop my bishop. I go here, he takes. He takes, I take. I go here, he takes, I take, he takes, I take. Okay, so I think I go here. No, I think. I think this is probably okay. Next move is probably gonna be this move here. You go here, he goes, I take. Is he really gonna offer this? I think he takes. And I go here. His pawn structure is, okay. So now I go here, go here. I go here now. He can actually just push up his piece. Actually just go here now. Actually gonna prevent that from happening. And then you go here. No, unless he does that. He can do that too. but I really don't like how he's using his pawns. I mean, they're pretty well like placed out. I go here now. Oh, he gets his. Blunder. Wait. How did I miss that? I'm not. That's 20 push-ups. 20 push-ups. Dang it. What a blunder. Hard work means nothing if you don't believe in yourself. I think that's such a good quote. Mark out the 10 o'clock opening price here. I forgot to do that, but it's not like prices did anything while I didn't do anything while I was playing chess. It's like we shot higher, we respected this larger 1 minute fair value gap and took out that high. I bet you that was a 10 minute model. Yep, it was a 10-minute model. 10-minute power of 3 model. Clear as night and day. With the fibers. Based on this 30-minute, if we close here in about 3 minutes and we close bullishly like this, I would actually like to see prices take out this 30-minute swing high. Based on the power of 3, just based on that 15-minute power of 3 and 30-minute power of 3. But we'll see what we do here. We still have 3 minutes left, so no need to rush anything. This new day opening gap could be the draw. Is so like let's just say I were to enter off of this 3-minute fair value gap, right? Stops is here. To make it a 1, maybe I enter here, and this new day opening gap would end up being a partial as well. Yeah, it would look something like that. That would be the trade idea. If we close like this in the next 2 minutes or so, but we'll see. So like I said, even though yesterday we created these, you know, larger SIBIs, based on the like I said, based on the hourly time frame, we never got a respect to the SIBI, right? We never got shown a bullish, or sorry, we never got shown a bearish power of 3. We just kept continuing higher and higher, and with Powell speaking, we just continued to climb higher. So this is like this is just indicating we're disrespecting these bearish PD arrays. So we have a candle closure in about like 40 seconds or so. So here I'll actually set it up. 576 is my risk. So that's about 576. So I'm entering off. Let's see if there's a 4-minute fair value gap, because yesterday I failed to recognize the higher time frame fair value gaps. So there's a 3-minute fair value gap. There's a 2-minute fair value gap, and on the 1 minute. Okay, so I'm entering off the 3-minute here, targeting that swing high. We opened up here. So if we take out that 15-minute and 30-minute swing high, then I would cancel my order. But if we continue to hold, if we leave this actually swing high intact, then I'll consider taking the trade. But yeah. So 1.1 to 1.7. So let's see if we can get a retracement back inside this 3-minute fair value gap. And I'm like I said, it's modeled. I would take all the time. We have time frame alignment. It appears that we will fill in this 4-hour fair value gap here. So this is the complete fair value gap fill. So I do want to pay attention to that. And it's at that fair value gap fill is actually at the basically the new day opening gap. So let me mark that out. Fair value gap high, and that's gonna be my draw. my stop loss, it appears to be right below the consequent encroachment. Yep, right below the consequent encroachment of this 15-minute wick, targeting that 30-minute high. The time frame, this 15 minutes is suggesting that we will continue higher as well. So we have time frame alignment between the 15-minute and the 30-minute, and now it's just up to prices if they will give me a entry back inside that 3-minute fair value gap or not. Simply just executing here. If we don't get that entry, then we don't get the entry. And this is a model that I would take all the time here. Like I said, it's just very time frame alignment. We have power of 3 lined up with each other. So, and if we get stopped out, we get stopped out. But like I said, I'm willing to take this risk. And let's see what happens. So if you get a closure, if we get a 3-minute candle closure below this consequent encroachment, then I would consider taking off half of my contracts. Okay, so we got a candle closure below it. I don't like to see that, so I'm actually gonna mitigate risk here. So notice how we close below the consequent encroachment of that 3-minute fair value gap. I don't like that. That's not bearish, or I'm sorry, that's not bullish price action. So I just took off 3 contracts there just so I can mitigate risk. And there's this 15-minute fair value gap here. But however, if we retrace back inside this 30-minute or 15-minute fair value gap, that just makes no sense. So I'm going to treat that as a breakaway gap. And I would rather like to see us leave this 15-minute fair value gap unfilled. I want to see if prices use this fair value gap as an inversion here. This should become an inversion. I want to see prices close below that 1-minute SIBI and treat that as a support level, not resistance. Alright, so we've actually filled in that entire 3-minute fair value gap now, which I didn't want to see. And if we get stopped out, we get stopped out here. Let's see. Very interesting price action today. Very, very interesting. If we get a closure below this 3-minute fair value gap, I consider closing 2 more contracts because I don't want to see a candle closure below it. I don't want to see a 3-minute candle closure below this 3-minute fair value gap. So let's see what we do. I'll close off 2 more positions here too, just so I can mitigate risk. We didn't get that candle closure, but we actually or let's see actually. We did get a candle closure below it. Close off 2 now, just so I can mitigate risk. So now my position size is only 2 contracts. I'm actually gonna get rid of this take profit. Yeah, and I'm just managing, just only trying to mitigate risk here now, because I don't like how we close below that 3-minute fair value gap. And like this trade that I'm taking here is actually, I feel like there's a lot of confluences there. I want to see a fill of the 4-hour fair value gap high. We had a bullish power of 3 on the 30-minute time frame and the 15-minute time frame. So it's a, there's time frame alignment, but there's time frame alignment between those two time frames. And yeah, that's what I was you know, taking this trade based off of. Yeah. Let me see if there's a new chapter of JJK. No new chapters. Oh, there is actually. Jujutsu no Kaisen just came out with a new chapter. If we can't get a candle closure below this 3-minute fair value gap here with this next 3-minute candle, I'm going to, well, we might actually get stopped out before I can completely close off the trade here. We'll see. We have about 40 seconds left, so you know, was able to mitigate risk, which is good. Let's see, 30 seconds. All right, so there was a stop out. That's fine. I was willing to take that, and I just took it. It's, I want to say it's that bad of me, but yeah, we just got caught up in an interesting prick PA. I'll do a trade recap of this later, or actually in the afternoon here, right after I go to the gym. But yeah, thank you guys so much for watching, and until next time, or until Monday.